Back with us here on Halftime Report. 160 points down now on the Nifty, almost 600 points down on the Sensex as we speak, down to the lowest point of the day. And considering the kind of recovery that we saw during Friday's trading session, some bit of profit booking coming in at higher levels. What's not doing well on the index though are stocks like Titan, BPCL, Tech Mahindra. Actually, IT is a sector that is not doing well in today's session. Both Tech Mahindra, TCS are leading the losses on the index. Among some of the PSUs as well, ONGC, NTPC also trading with losses of anywhere between 1 to 2%.
All right, so we'll talk about all of this. One of the things that we need to watch out for is Reliance in today's trading session. It's down about 21% from its 52-week high. Has been a bit of an underperformer. It's a fair amount of period for this stock to actually underperform. Typically known, to lead the index on the way up, given its weight on the frontline indices, has a lot of drivers. Let's see, what the view on Reliance from the market is. We do have Parag Thakkar, who's the senior fund manager, Fort Capital, joining us now in the studio. Parag, a pleasure speaking with you. Let's dive straight into Reliance. I mean, what exactly is happening out here?
Yeah. So basically, I will tell you, first of all, the disclaimer that we own Reliance in our portfolios.
Okay.
And I'm thumping the table buy on Reliance. I have.
Okay.
Because one, the earning has bottomed out. I think Q2, where we saw EBITDA of around 38 to 39,000 crore, I think that was a bottom. From here, refining margins have recovered. The full benefit of tariff hike will come in from Q3. So all this will result in EBITDA going up from 39,000 crore average, which we have seen in last 2 quarters, to say above 40 to 43,000 crores. So there will be a 9 to 10% QoQ EBITDA improvement. The other point which I would like to say is that due to the necessity of the industry, the tariff hikes will continue to happen. And Jio has become a big business at 195 rupees ARPU and 47 crore subscribers. It is making 70,000 crore EBITDA. And 15% tariff hike is something which you can build in, which will drive EPS growth of at least 12 to 15% for Reliance in next 2 to 3 years. And even in AGM, Chairman has said that by the end of decade, that is 2030, Reliance will be more than double its size today. So if you see, for example, and this is my favorite thing, which I would like to share, that today Reliance market cap is around 17,20,000 crores. And it makes a cash profit of 1,35,000 crores. So around 8% cash flow yield, OCF yield, after paying interest, you are getting today. So it's a fantastic entry point. Your CSEC is at 6.8. You are getting 8% cash flow yield. It is not free cash flow, OCF yield. And this is going to grow at 12 to 15%. And if you give me opportunity, I'll just tell there are 3 misconceptions about Reliance today in the market. One is that Starlink fear, right? Now, there is a AT&T presentation available which shows that Starlink has only 40 lakh subscribers in 100 countries, while Reliance in India has 47 crore subscribers. Okay, so it is hard for me to believe that Starlink can disrupt Reliance or I would say any telecom player in India. Second misconception about Reliance, there is high debt. So everybody, if you ask to retail people, they'll always say that Reliance is very high debt. I would like to set it correct. Reliance EBITDA last year was 1,65,000 crores and net debt was 1,16,000 crores. So net debt to EBITDA is below 1x. Even last quarter, when they reported EBITDA of 39,000 crore, when refining was at down cycle, full benefits of tariff hike were not there and retail was sluggish. Right? That time they did 39,000 crore EBITDA and net interest cost, other income, so interest cost less other income, was only 1,200 crores. So their net interest cost is just less than 5% of the EBITDA. So I would like to remove this particular thing from retail people's mind that Reliance is very highly debted, right? Third point which I would like to say is that when people say that Reliance ROE is always 10%, 11%, right? So why we should give it above book value? Now here is my point, that when Reliance was investing in Jio, and they invested around 4 lakh crores, if I am not wrong, and today it is going to get a value of 9 lakh crores. They invested around 1.5 to 2 lakh crore in retail. Today they are getting value of 8 to 9 lakh crores. So in Reliance, they invest in futuristic businesses, which the value for shareholder gets unlocked in long term. So to see Reliance on current ROE or current free cash flow is actually a myth.
So, you're mentioning that there will be an EBITDA improvement on a sequential basis, right? What are the factors that will contribute? Will it be the O2C business? Will it be Geo, retail, or a combination of everything?
So I'll tell you, first the full benefit of tariff hike, right, which happened. Because in last quarter, it was not a full benefit. Second, refining margins have improved significantly from the bottom. Even today, I just got a message that today it has touched Singapore GRM is at above $6. And remember, these great companies do great things, right, in the bottom of the cycle. So they did this Russia deal.
Got it.
In my view, if $1 improvement in Singapore GRM happens, EBITDA goes up by 4,500 crores. And Russia has various varieties of oil to offer, which will improve Reliance O2C business EBITDA significantly.
So we understand the point on Reliance. Finally, before we let you go, slightly short on time, are there any other themes that you are, what's your view on the market?
So basically, my view is that from here on, the Indian economy has bottomed out.
Okay.
So stock market might have seen some rally because of from 23,300, now we are at 24,700 Nifty. So some part of that is captured, but I would say that from here on, government spending will recover, rural consumption will come back because of good monsoon, and there were late mandi arrivals. So that benefit will also come. So I think apart from Reliance, of course, banking, financials, cement, everybody will see benefit, or say L&T kind of companies. And here I'm not talking about price points. I'm just talking about the direction of the economy.
All right, Parag, thank you so much for spending time joining us on the show today on Reliance, and of course the themes that he's watching out for going forward. Time for a short break here, more on the markets, and of course the FNO update at midday. Stay tuned, back on the other side.